Good afternoon. Welcome to Halftime Report. I'm Reema Tendulkar. With me is Mangalam Malu, still down for our markets, off about 80 points on the Nifty. About half an hour back, we attempted a bit of a recovery. So the Nifty recovered from levels of about 11,100 thereabout. But that recovery seems to have plateaued off, at least for now. The problem is the Bank Nifty, which is coming in for a serious bout of profit taking. The Nifty Bank is down close to about 560 points. Despite this underperformance, the cut of 2.5%, you can see on the Nifty Bank, it's still up 2.5% so far for the week. So that tells you the kind of run-up it's already put in the last few days. And today it's just catching its breath, and it's coming for some amount of profit taking. The problem is that apart from Reliance, which has seen a stellar up move, and a handful of IT stocks which are holding up, the breadth of the market is weak. So almost like 45 stocks of the Nifty are currently in the red, and the advanced decline ratio has 1,500 stocks on the NSE which are currently in the red. Hi, Mangalam.
Hi, Reema. That's right. In fact, like you spoke about the breadth of the market and some profit taking, perhaps a lot of it was expected, primarily because one, global markets weren't doing too well, and secondly, we saw the put call ratio move to around 1.9 yesterday, which was the highest that we've seen in at least the last 1 year or so. And as a result of which, maybe things were getting overheated and some bit of correction was on the cards. Just as we speak, the put call ratio has cooled off to 1.6. So let's see whether there is some recovery here from here on or not. That will be the key to watch out for in the last hour of trade. Interestingly, on the Nifty as well as the Nifty Bank futures, the discount has widened a fair bit. The Nifty futures plate comes up for you, and that's telling you that people were shorting the Nifty at around 35 points. It is very close to that 11,100 mark. So that is something we'll keep an eye out on. And on the Nifty Bank, which has been underperforming today, the discount has actually widened to 66 points. So that's telling you that there is a fair amount of writing in terms of short positions being built up in these places. So we'll keep an eye out on how this pans out for the remainder of today's trading session. But it's Friday, where we've seen a dip. The first 4 days of this week, we've seen a big rally for our markets. Let's take you through all the top stories that we're tracking this afternoon. The stocks see a sell-off across most sectors as the Nasdaq dip prompts profit-taking after the strong run-up. Banking, FMCG, metals, autos slide, while Reliance and pharmaceutical stocks with a few IT stocks hold up. Gold, meanwhile, crosses 50,000 rupees per 10 grams. Fang fever seems to have gripped the Reliance stock as it continues its unrelenting climb. Jefferies' Chris Wood points to under-ownership by mutual funds as key reason for the stock to see continued buying in the counter. The stock of Sun Pharma jumps after the company's subsidiary Taro reaches a settlement with the US Department of Justice for $200 million. The company also offers to pay another $213 million to settle federal healthcare claims. Rural demand shows signs of fading in July, warns Credit Suisse. Technopack 2 sees surge in rural consumption as sustainable on lack of jobs in the hinterland. The development signals concerns for FMCG companies that we're hoping to ride on the rural consumption to grow. A day after Infosys, Salil Parekh strikes an optimistic note on new deal wins. Infosys reports a 29% growth in deal wins for the quarter. Even smaller player Zensar talks about bottoming out of business.
But let's drill it down to individual stocks. The day, the week belongs to Reliance Industries. RIL is up 3% today. This week it's rallied 12%. Nimesh is here to tell us why. Nimesh?
Hi, Reema. So, there are a lot of fundamental reasons for the Reliance stock to outperform in the last couple of months. And that's been the trend since the AGM announcement as well. So, since the AGM on 15th of July, the stock is up 16%. And on the day of the AGM, there was an announcement of Google buying 7.73% stake in Geo Platforms. So these are all fundamental reasons. But there is a technical angle as well as to why the stock is outperforming, and there is now need for mutual funds to chase this particular stock. So the Reliance weight in the MSCI India index has gone up to 15% now, and that was as low as 6% in 2015. So there has been a steady increase in the Reliance weight in the MSCI for the last couple of years, and that has actually accelerated at least in this year. So that is the reason why a lot of mutual funds and FIIs who are under-owned or not owning Reliance stock need to now rush and buy the Reliance stock, and that probably explains the kind of move we have seen in the Reliance stock of late. That's exactly what even Chris Wood of Jefferies has mentioned in his report. He says that, and I quote his report, that Grid and Fear hears that most of the domestic mutual funds are still underweight on Reliance. In fact, the Jefferies India office analysis on mutual fund holdings do suggest that domestic mutual funds are 5% underweight on Reliance at this point in time. So that explains the kind of move and the rush to buy the Reliance stock of late. But as I said, while fundamentally a lot of things are in favor for Reliance to outperform, but this is a technical reason why, because of the domestic mutual funds under ownership, you're seeing the stock outperformance. The fact that Reliance weight is the highest in the Nifty and in the Sensex now, as well as in the MSCI India index.
Nimesh, 15% weight on the index for Reliance. That compares with some sectors like the IT sector as a whole has roughly around 15% weight on the index. Mutual funds go to buy Reliance stock price moves higher, and then the weight of Reliance increases, and as a result of which mutual funds buy more of Reliance, and that gravy train continues to roll on. 13.5 lakh crore in terms of market cap coming in for Reliance, 50,000 of which being added in just the last 3 or 4 trading hours. Prashant has some interesting data comparing Reliance and Bharti Airtel, because we talk about Reliance as a telecom company as well. Prashant, over to you.
The question that we're trying to answer is that will domestic funds, domestic mutual funds need to chase this higher? And I'm basically using the Bharti versus Reliance angle just to illustrate that point for no other reason. Maybe one other reason also, because both these companies were categorized into the same telecom space till a few months back. Bharti still remains a pure play telco. Reliance has become telecom plus, right? I mean, there are lots of other businesses to which future value, which the market is ascribing to it. Now look at the first graphic, which is Reliance's weight in in the Nifty, and this is Bharti's weight in the Nifty. This is data as of the end of June. RIL's weight is 12.5% as the end of June. Bharti's weight was 3.1%. Now remember, keep these numbers at the back of your mind. So RIL's weight is over 4 times that of Bharti's weight in the Nifty as of the end of June. Now compare what the domestic mutual fund industry owns of the Bharti stock and what it owns of the Reliance stock in value terms, right? This is again as of the end of June. This is nothing but domestic mutual fund shareholding multiplied by the total as a percentage of the total outstanding shares multiplied by the quarter ending price. That's about it. In the case of Reliance, that number stands at 54,000 crores. So domestic mutual funds as a category owns about 54,000 crores of RIL stock. They own about 40,000 crores of Bharti stock. The difference is 14,000 odd crores roughly, right? And remember, the weight as of the end of June quarter, RIL's weight was over 4 times that of Bharti's weight. That is essentially the big difference that we are looking at. And that kind of ties into the question I began by asking is, will mutual funds need to quickly rebalance their portfolios? It's not an easy choice. Stock has done quite a bit higher, but if they don't do it now, I mean, as has happened over the past so many months, they've sat on the sidelines watching the stock go up, watching it take the index higher, and their funds underperforming. The last graphic is basically the FII positioning in both Bharti and Reliance, and here, I mean, actually the numbers are much more comparable or match what their respective weights and indices are. So FIIs own about 61,500 crores of Bharti. They own about 2,60,000 crores as of Reliance Industries. All these numbers again as of the end of June. So not the problem, but the positioning problem, so much so, is not with FPIs, FIIs. It is a problem and a real problem for a lot of domestic mutual funds as a sector, as a category. Back to you.
Thanks, Prashant. So will domestic mutual funds need to chase Reliance Industries from here on with the stock at lifetime highs, a market capitalization of 13.5 lakh crore? It's tough, but will they have to do it to play that catch up? Thanks. Very interesting analysis coming up. Let's move on and talk about Sun Pharmaceutical. That stock is holding up high. This is on the back of Taro settling the price fixing litigation with the US Department of Justice. Sonal Bhutra with the details.
As you rightly pointed out, Taro, that is the subsidiary of Sun Pharma, has resolved all the dispute in terms of price litigation with the Department of Justice. This is for cases pertaining from 2013 to 2015. Now, Taro has agreed to pay $205 million to settle this particular litigation. Additionally, they will also be paying $213 million to resolve all claims related to federal healthcare programs. So, all in all, there's an outgo of around $410 million. Now, back in May, remember, Apotex had also settled a price fixing litigation with the DOJ for their drug Pravastatin, and they had paid around $24 million. And back then, Jefferies had said that they expect the liability for Sun Pharma to be lower at that around $380 million levels. So it is in line with what the analysts were expecting, but there are certain clarifications that are required. For instance, Nirmal Banks today in the morning told us that this settlement does clear some overhang, but there is more clarity needed as more litigations on the company are ongoing, and we also need to check whether the settlement with DOJ will give them immunity against state litigation, because the other 45 states also have an ongoing litigation with the company. Also, do remember back in June there was another litigation against the company for the dermatology portfolio, which is very big for Taro. So all these clarities are required for this particular stock, but this little bit of overhang definitely goes away, and that's why the stock is excited in trade today. Back to you.
Sonal, thanks a lot for that. So that's about Sun Pharmaceuticals, the other stock which is buzzing around in today's trading session. With that, we'll slip into a short break, talk about one of the banks that reported a very strong set of earnings in the first quarter across all parameters. Bank of Maharashtra, that's the one. What led to this outperformance? We'll get chatting with Mr. A.S. Rajiv, who's the MD and CEO of the bank, on the other side.